This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks fall, tracking Wall Street as tech concerns continue to weigh on sentiment. U.S. President Donald Trump says he'll announce his Fed chair pick soon. Speaking in a primetime address from the White House, he added that he'll unveil some of the most aggressive housing reform plans in American history early next year. And shakeup at the top. BP appoints Woodside's Meg O'Neill as CEO, making her big oil's first female leader. It's just gone past 9 a.m. across the Emirates, 7 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersetchi, and quite a busy day for central bank activity, as we have been telling you all week. But of course, today we are waiting quite a bit of activity. But let's just start on where our markets are right now. U.S. equity futures actually pointing a bit higher, which might be surprising for some if you take a look at the close on Wednesday, which saw quite a beating, a tech sell-off, which actually a lot of it came from some of the instability that we saw within markets coming from some news about Blue Owl and also Oracle, but seemingly getting a bit of a pop after we got some upbeat news from Micron, potentially suggesting that some of the concerns around lofty valuations in the AI trade more broadly, potentially adding some questions in there just about where that stands right now. If you take a look at NASDAQ futures up just over 0.3% there. We also have the benchmark U.S. 10-year Treasury there up on the board, the yield there down just a basis point right there. We are waiting, though, for a CPI print in the U.S. to come later today. We're also seeing markets dissecting some more Fed speak that we're getting throughout the week. And in particular, it was interesting hearing from Christopher Waller. He is, of course, reportedly one of those that are being interviewed by the White House and President Trump to be the next Fed chair. But he did say that he supported the case for more Fed rate cuts. So right now we're seeing the U.S. 10-year yield at about 4.1392 there. We also have the pound dollar on the board. They're paying close attention to that, of course, because we do have the BOE decision to come later today on Thursday. Right now, we've seen the pound losing a bit of steam, weakening against the greenback, but we are expecting the BOE to cut interest rates by 25 basis points. And let's just quickly bring you oil there up just under 0.6% there, pairing some of the gains after we did get that speech from President Trump. And a closer look at gold right now for our terminal chart. We've been speaking for weeks and months about how gold continues to march higher, but our Anthony Stevens on our markets team suggesting potentially momentum is slowing as prices test resistance near that 4,350 level. The broader uptrend, it still does remain intact. We have seen more central bank buying, but the question is, can this uptrend be sustained? And potentially for some of the bulls out there, could we even continue to see prices break above that level? So something to watch closely as we continue to see more bids for precious metals more broadly. Let's zoom in, though, on how markets in Asia are faring. Min Min Lo is standing by in our Hong Kong studio for a closer look at that. Min Min, it's looking like a bit of red on the board there, potentially a continuation from Wednesday?
That's right. We are seeing risk off here, a bit of a choppy trading, especially around the tech and AI team. I've put some of the tech-heavy indexes here. The Hang Seng Tech, the Kospi are both seeing huge declines here, and it continues to be that Oracle story that you mentioned, right? Blue Owl pulling out of a financing deal of that data center in Michigan. That certainly seems to be dominating market sentiment around the overvaluation of the AI sector. We're also watching Japan very closely because we are 1 day away from the BOJ rate decision, and we're watching the yen, which appears to still be weakening today, and it seems like markets are still more focused on Takaichi's fiscal spending plans given where the yen is trending. If you take a look, this was where Takaichi had won the race, and we're about 5% higher now on dollar yen despite markets pricing in a full rate hike tomorrow. We are expecting the budget, the 2026 fiscal budget due end of this month, something to watch as well, and the 10-year yield as well pointing up, and we could be breaching that 2% level in the future.
Thanks so much, Min Min Lo in Hong Kong for us. Min Min, we will check back in with you in just a bit. Let's turn back, though, to our top story, which is about President Trump. He used his primetime address to reassure Americans concerned about the rising cost of living by announcing plans to award a special holiday payment to military service members and roll out new housing reforms in the new year.
Tonight, I am also proud to announce that more than 1,450,000, think of this, 1,450,000 military service members will receive a special, we call warrior dividend before Christmas, a warrior dividend in honor of our nation's founding in 1776. We are sending every soldier $1,776. You will see this in the new year. I will announce some of the most aggressive housing reform plans in American history. A major factor in driving up housing costs was the colossal border invasion.
For more, we go to our news desk managing editor, Jill Desis, for more. So, Jill, two headlines there from President Trump. What stood out to you from his primetime address?
Address is to remember, I mean, this was really meant as kind of a blanket address to for Trump to tout all of, his accomplishments for the year. This is really something that I think, when we're looking into how much he really spent in the speech talking about the domestic economy, it was trying to convey that he's, bringing down prices. I mean, it does seem pretty clear that Trump and the Trump administration are trying to set them up going into 2026 when there's a really, really critical midterm election in November of next year. I mean, it's this sort of attempt to convey all of this messaging around, why they want voters to continue keeping Republicans in office when that's becoming, something of a bit of a muddled message here. It's, quite a bit difficult because, Trump obviously came into office in the second term pretty definitively off of his ability to cast the Biden administration as being responsible for high inflation, a lot of price pressures. But now, he's been firmly in office for nearly a year at this point, and we've already seen some indications that there are, some concerns among voters about whether or not, that's, really kind of taking effect here. I mean, we saw in the most recent elections in November some pretty key Democratic victories, kind of off of their ability to sort of pivot away, from that messaging. And we also have seen some recent polling numbers suggesting that Trump is losing a bit of support here in a recent Reuters Ipsos poll showing a 39% approval rating among American adults here. So again, I mean, it's a big part of this messaging is all about trying to sort of reframe the domestic economy issue going into 2026. Obviously, a lot of time now between, right now and then those midterm elections, but that's clearly going to be a focus for the president and Republicans going into next year.
And Jill, really quickly, I mean, of course, this is coming off the back of a lot of concerns, as you were mentioning, economically for President Trump. I wonder what else we did get from him on some of the economic wins and potentially headwinds that he has facing him.
Yeah, it was interesting because obviously, again, he did on a couple of occasions continue to sort of point out, he's like, look, I inherited a mess, essentially. And, he is obviously continuing to sort of frame a lot of those price pressures and inflation issues in particular as, being things that he inherited from the Biden administration. So, there's a lot of sort of, old hits in there that you're hearing from Donald Trump when he's talking in this, sort of big sort of year-ender speech. I think what was kind of interesting is the different measures that he was trying to tout as things to look forward to in 2026. That aggressive housing reform policy that he sort of hinted at, talking about that coming in the new year. He also talked about, some programs that the administration is working on to make pharmaceutical drugs cheaper. A lot of that is sort of tied to this idea that drug makers could potentially see some kind of tariff relief in response to that. But you do see sort of that combination of messaging there that Trump is trying to accomplish going into 2026.
Right. And of course, we did potentially get a little bit of a teaser for when we will get the next Fed chair announcement. Jill Desis, Bloomberg News Desk Managing Editor. Jill, thanks so much for starting us off this morning. Let's just stick on the markets, though. And joining us now is Rufaro Chiriseri, head of fixed income for the UK and Europe at RBC Wealth Management. Rufaro, thanks so much for waking up early with us. I just want to start with this potential Fed chair announcement and potentially some implications from where you sit. What is it that you're watching for? Are you invested into potentially who this next Fed chair will be?
Thank you for having me this morning, Jennifer. I think, it's difficult to speculate on some of the changes that we're coming up with, the changes in the Fed chair. But we ultimately think it won't make too much of a difference in terms of the balance on the FOMC. We think some of the aspects that actually may be quite key is perhaps if Fed Chair Powell stays on the board, and also the decision from the Supreme Court around Lisa Cook as well. That can potentially have some changes in terms of the balance on the FOMC in terms of how dovish or how hawkish the committee is. But in terms of who the individual is, we don't think that necessarily makes a big change at this particular point.
Let's go across the Atlantic, though, Rufaro, and talk about the Bank of England, because that is the big story for today. What is your expectation for how this might unfold? We are expecting a cut, but I wonder what in the details are you going to be watching closely for?
I think we agree with the market sentiment currently that we're expecting a 25 basis point cut today. We think the last two sets of data since the November meeting are really in support of that. So we think Governor Bailey will swing over to favor a cut. So our base case is a 5-4 split. But what the markets might be looking for, absent a press conference in this instance, is perhaps how that vote split will be. If it swings a little bit more dovish, it might be an indication to the market that the committee is now shifting to a more dovish stance. And ultimately, it's also some of those comments we'll get from the MPC committee members that we'll see in the minutes that will also be helpful for markets to see in terms of just what the sentiment is within the central bank.
What about the sentiment, Rufaro, as far as the economy goes and some of the fiscal concerns that really permeated across markets in the UK earlier this year? Do you think they're in the rear view?
I'll certainly say after sort of a series of press leaks and everything else that was sort of surrounding the budget, I think we're sort of at that point now where some of the fiscal concerns are now in the rearview mirror. We now have a higher fiscal headroom, which is positive for markets. When we also look at the key factor which gilt markets would be concerned about is in terms of issuance. We now think we're past that peak in issuance. The DMO is also skewing issuance towards the shorter end, which is also positive for markets, given that that natural demand at that long end of the curve has also now started to track downwards. So we think some of those fiscal concerns are now in the rear view. And when we sort of think going forward, we actually think gilts are pretty well positioned to outperform next year. We think the Bank of England is actually going to cut rates even faster than what's currently priced in the market at the moment. We're expecting a year-end bank rate of around 3%, which is a little bit more, which is a bit more than what's currently priced in by markets. And we think against this backdrop, gilts should outperform.
Do you then reposition your portfolio considering that, Rufaro?
So before we had the budgetary announcements, when we sort of had a good gauge of just some of those fiscal concerns starting to fade, we actually shifted our portfolios to being more overweight. Of course, there will be some volatility we're expecting to come through into gilts, not just due to what's happening in the UK, but what's happening globally in terms of with central banks. We've started to see a little bit of a shift in terms of if we look out to 2027, where markets are starting to price in a little bit more hawkishly, where we're starting to see the current interest rates versus what those swap rates are in 2027 start to deviate. So a little bit of hawkish sentiment is starting to come back into the curve. So that may prove to be a little bit volatile for yields into the coming year. But also one of the other aspects that we've observed over the past 5 years is that when we tend to get a strong rally into year end, sometimes that tends to reverse at the beginning of the year. And if the market starts to sell off in December, that tends to continue into January. So that's one of the key risks we're still monitoring for. So, but generally in terms of over the course of 2026, we think gilts will still be sort of the top performer amongst developed markets.
Rufaro, I just want to broaden out quickly to Euro credit, because I was seeing in your notes you project an uptrend in high yield defaults in 2026 driven by idiosyncratic factors. Can you take us into that thinking?
So I think we've recently hit a peak in terms of where high yield defaults levels had been, but we expect that to continue to trend a little bit upwards into the coming year. And that's really just due to some of those companies that may have some of those weaker fundamentals. So we don't think it's a broad sort of default scenario. And we think in this scenario, being quite active in the space and picking out some of those good companies within the high yield space. One of the more attractive aspects about high yield is the fact that you have a decent carry cushion there. Yes, spreads may widen out a little bit, but we think overall high yield may actually outperform investment grade in the upcoming year.
Fascinating insights, especially ahead of the BOE and ECB decisions today. Rufaro Chiriseri, head of fixed income for UK and Europe at RBC Wealth Management. Rufaro, great to speak with you. Thanks so much for joining us. Now, coming up, Woodside shares slide after Meg O'Neill departs to take the top job at BP. We discuss what's behind the shakeup next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Woodside Energy shares falling in Sydney after the announcement that its now former CEO, Meg O'Neill, is taking the top job at BP. The move makes her Big Oil's first female chief executive and comes as the British firm struggles to revive its fortunes after a botched pivot to renewables. For more, we're joined by Bloomberg's Kira Wright in Sydney. Kira, were shareholders expecting this announcement? It seemed to take quite a few people off guard.
You're absolutely right. I don't think that anyone was expecting this announcement to land when it did this morning. All of the shareholders, all of the analysts that I've spoken to this morning were taken, quite off guard, I think.
I mean, what is it that they have been telling you, Kira? Dig into some of those conversations that you've been having.
I think that when people are discussing this, the biggest question that's on everybody's minds is what this is going to mean for both BP but also Woodside's future as well. Meg's quite well known, I suppose, in the industry for being so bullish on LNG and gas. She thinks that it's a really great transition fuel when we're talking about, moving over to renewables. Now, of course, when we're talking about that in the context of BP has unfortunately had a couple of failed bets, I suppose, in these last few years on some of those renewable transitions. So we've had them pull out of a big hydrogen project here in Australia, for example. Also, I guess some of the capital that they've allocated into biofuel also hasn't kind of panned out as I suppose they initially hoped. So some people are speculating that by appointing Meg O'Neill into this position, they could potentially be indicating that they're making a move back to that, I guess, traditional fossil fuel play, particularly the gas and LNG component of that.
And Kira, maybe we can just talk a bit about Meg O'Neill herself. We mentioned the historic nature of this appointment. What do we know, though, about some of her achievements and potentially then what she might bring to this role?
Yes, yeah, sure. So as I mentioned, Meg is really well known for being so bullish on LNG and gas. Some of her biggest achievements with Woodside have included getting the approval of the Northwest Shelf gas facility. It's this huge gas export facility in the north of Australia, and that one was approved earlier this year to continue operating until 2070. So as you can imagine, that was quite a contentious move with a lot of environmental groups, but it also has been seen broadly as quite a good strategic decision for Woodside as a company moving forward. Meg also was able to push through the acquisition of Louisiana LNG, a big LNG facility in the US, which also marks, I suppose, Woodside Energy's expansion globally.
It's really a historic appointment. We'll have to watch, especially as she takes the role in April, I believe our reporting suggests. Bloomberg's Kira Wright in Sydney. Kira, thanks so much for your reporting. Appreciate it. Now, coming up, Turkey moves to mend ties with Washington, seeking to return Russian defense systems. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Here is a look at some of the other stories we are following today. OpenAI is reportedly in talks to raise tens of billions of dollars at a valuation of about $750 billion. According to a report in The Information, discussions are still preliminary and details could change. The startup, which is not yet profitable, has raised billions in recent years at ever larger valuations, including initial talks this month with Amazon for a $10 billion investment. Now, let's switch gears and talk about Turkey. Turkey is seeking to return the S-400 air defense systems it bought from Russia nearly a decade ago, a move that would end a controversial deal that strained its relationship with the United States and other NATO allies. For more, we're now joined by Bloomberg's Onur Ant, who is following the story from Dubai. So, Onur, we were just speaking about this story just a few days ago with you. Why is Turkey now looking to give back these S-400s?
Well, the S-400s have been a major thorn in Turkey's ties with the Western alliance, primarily with the U.S., Jennifer. The system, the Russian system, was acquired at a time of estrangement for Turkey, between Turkey and its Western allies, including Washington, about a decade ago. And that feeling of estrangement had deepened in 2016 following a failed coup attempt against Erdogan's government. The mastermind, or the alleged mastermind of that coup attempt, was at the time living in the U.S. So for Turkey, the purchase was a way of, on the one side, mending its ties with Russia, but also on the other side, it was a way of diversifying its defense suppliers away from the Western alliance. And because of that, the country was, for a very long time, often accused of getting too close to Russia. Now, and since then, any indication that Turkey may want to get rid of those S-400s have long been considered as a sign that Turkey may want to realign its foreign policy interests again with its traditional Western allies, including Washington. And that's something that Turkey has been signaling that it wants to do for some years now, which kind of explains the reasoning behind why Turkey may want to give back those S-400s now to Russia.
Right. Right, and we have been seeing closer ties with Washington and Erdogan over the past few months. Does that mean then the F-35 program will be reinstated? What does this mean for ties between the two?
Yes, that's one big major implication for this. So if Turkey manages to return the S-400 missiles to Russia without completely upending the balance of relationship that it has with its neighboring country and upending the military balance anywhere from South Caucasus to all the way to Northern Africa, where the two countries have been sometimes at the opposing ends of military conflicts, then it will definitely first boost its regional standing, and at the same time it will result in a sudden significant improvement in its relationship with the US.
Right.
And as you said, reinstatement in F-35 program is the biggest objective.
Right. Bloomberg's Onur Ant in Dubai. Thanks so much, Onur, for your reporting. Now, coming up, we speak to the person behind Dubai's attempt at creating a permanent musical theater production. Stick with us. That's next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Asian stocks fall, tracking Wall Street as tech concerns continue to weigh on sentiment. U.S. President Donald Trump says he'll announce his Fed chair pick, quote, soon. Speaking in a primetime address from the White House, he added that he'll unveil some of the most aggressive housing reform plans in American history early next year. Plus, central banks in focus. The BOE and ECB will announce rate decisions today amid diverging economic pictures. It's just gone past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi, and it is a big central bank decision day. Of course, we are watching closely the BOE and the ECB. We are also awaiting a delayed CPI print from the U.S., but still, markets right now still trying to dissect what is happening with the AI trade, some lofty valuations, and a bit of the sell-off that we did see on Wednesday, continuing in the Asia session. But if you take a look at U.S. equity futures, seeing a bit of a pop right now, up just over 0.3% there, perhaps being supported a bit by some news that we got from Micron, a bit of an upbeat forecast from Micron. So NASDAQ 100 futures seeing some upside after closing down more than 1.8% on Wednesday. The U.S. 10-year yield, we're also watching that closely, down about about 1 basis point there to 414.11. We are dissecting, of course, some commentary that we're getting from the Federal Reserve, the FOMC committee members, as well as Christopher Waller, who on Wednesday insinuated that he supported more rate cuts. We, of course, have some reporting that suggests he is in discussions with the White House potentially to be the next chair. We mentioned the BOE decision that is coming later today, which is why we have the dollar pound up on the board right now. The pound losing a bit of ground, a bit of weakness against the dollar right now, continuing to drift lower ahead of that decision, where markets are anticipating a cut by about 25 basis points. And let's just finish on Brent crude, up just over 0.7% there to trade just over $60, 14 cents a barrel, pairing some of the gains that we did see after that speech from U.S. President Trump as he sort of dialed down some of the rhetoric and perhaps some of the geopolitical tensions around what is happening with the U.S. and Venezuela. Let's just zero in, though, on gold. We've been speaking for weeks about how gold continues to march higher, but our Anthony Stevens of our markets team suggesting potentially momentum could be tested, especially around this $4,350 level. We do still see the broader uptrend remaining intact, but the question is really, can this be sustained? And for all of the gold bulls out there, can we see a clear sustained break above this level? And that is what we are watching very closely for, especially as we see more central bank buying and as well as some bids for precious metals more broadly. Let's zoom in, though, on how markets in Asia are faring. Min Min Lo is standing by in our Hong Kong studio with a closer look. Min Min, I see some of the tech stocks you have on the board there. Walk us through them.
Yeah, we are seeing a bit of a sell-off with some of these tech stocks here that is sparked by the hint of trouble with Oracle, with Blue Owl pulling out of financing the data center in Michigan, and that is again fueling the concern around AI valuations here. So you're seeing SoftBank, Tokyo Electron, TSMC all pointing down today. LG as well is affected by Ford canceling this deal with this company when it comes to electric vehicle batteries. But flip the board, we are also watching lithium stocks in China, because the Chinese government has indicated they are planning to revoke the mining licenses of expired mines, about 27 mines that could be affected. And some analysts are saying that this is not necessarily going to affect lithium output because they affect mines that are not currently in operation, but certainly it's still affecting sentiment here. You can see CATL off by about 4%, both A shares and off shares, A and H shares are both down, and it's the biggest drag on the Chinex index. We are seeing the lithium stocks initially gaining earlier this morning, but now pairing some of the gains and also pointing down today. Also watching lithium futures, which is also gaining on the back of this indication that the government is tightening the management of mining licenses in China.
Min Min Lo in Hong Kong for us. Min Min, thanks so much for walking us through that. Appreciate it. Let's turn back to the central bank activity we're getting today. The Bank of England will likely deliver a pre-Christmas interest rate cut later today. This as concerns shift from inflation toward the UK's struggling economy and jobs market. Inflation has slipped to its lowest level in 8 months, with consumer prices rising 3.2% in the year to November. Joining me now is Ven Ram from our M Live team. Ven, thanks so much for being with us. So we did get inflation yesterday. Is your expectation that the focus then today will be on where the split is within the BOE?
Morning, Jennifer. I think yes. I think largely the answer to that question is yes, because, you know, with the inflation print coming in at the lowest, as you mentioned, in 8 months, I think that it gives the Bank of England some room to play with in terms of its benchmark rate, which is at 4%, and with inflation at 3.2%, there is room for them to cut rates and still have a positive real rate. And that is important, which they didn't have previously. So I think that the markets are thinking that, look, Andrew Bailey, who voted against a reduction last month, is likely to plump for one this month around. But the question is, as you mentioned, you know, it's going to be the margin of split, and whether it's going to be Bailey alone or whether others are also going to join him in a rate cut, in a possible rate cut. That could be Catherine Mann, that could be Claire Lombardi, perhaps both even. So I think the question is the margin of split is what the investors are going to be watching, and the greater the split in favor of a cut would mean a more dovish reaction for the markets. The markets are thinking, there will be another 40 basis points of rate cuts after today's rate cut. And I think that, that's a bit of a tall order, because I think that the terminal rate that Bailey has previously indicated is around 350. So I think that, any overpricing and over-exuberance on that front is unlikely to pay off, although rates are likely to be volatile today.
I want to just stick on that then. I mean, how does this potentially play out in the gilt market? We did see gilt actually rallying after that inflation print yesterday. Is your expectation we'll see some gains today?
Absolutely. I think we are going to see a bit of a steepening in the curve led by the front end, because, the two-year gilt yield is around 370. For a long time, it was hovering around 380, kind of impervious to the idea of rate cuts from the Bank of England. But now, yesterday, they rallied big and they settled at 370. And I think that the rate is likely to go down to 350, 340 levels in the coming months. So that is going to lead the bull steepening in the curve. And I think that, that is going to be an easy walk for the markets, because the Bank of England has kind of hinted that as I was mentioning previously, that the terminal rate is lower than current levels. So I think there is a bit of wiggle room for the Bank of England to cut rates if inflation behaves well in the coming months. And therefore, I think that front-end gilts have a kind of a rosy outlook from here.
We'll watch closely for how that plays out. Van Ram, Bloomberg's MLive, part of Bloomberg's MLive team. Van, thanks so much for joining us there in Dubai. Let's just stay in Dubai, but switch gears a bit. The first major original musical created and produced in the Middle East begins its run tomorrow. Once Upon a Time in Dubai will be an attempt to explain expat life in the UAE. Joining us is the show's producer, Stéphane Boukris. Stéphane, thanks so much for being with us. This is really fascinating. Take us behind some of the thinking between your team and why you wanted to bring this show, build this show, in Dubai.
So we fell in love with Dubai like so many people a couple of years ago, and we wanted to give back. And as you can see, there are so many buildings and so many great things, but there wasn't like a piece of art like a musical. So we decided to do it, and we teamed up with Universal Music MENA to do an amazing musical, the first of its kind and the first ever created in this part of the world.
We're looking at some we're looking at some imagery behind the show itself. We know that Dubai in and of itself is and has its own IP, right? So how did you go about getting clearance from the tourism board? Walk us into the storytelling aspect of it.
So we work closely with the DET and with the UAE Media Council, and the script has been approved, of course, by the UAE Media Council, Dubai Media Council, in order to respect all the traditions, the values from this amazing place. And we wanted to depict what the UAE and Dubai is really today for the rest of the world. We wanted to create an emotional bond between this place that we love and the rest of the world, because you have billions of people coming every year, but still some people don't want to come. So we want to show the world the reality of Dubai in 2025.
But the reality depends on who you are, right? I mean, how do you ensure that you're depicting something that is supported by the government, right?
Yeah, so that's why we work together and closely on the script, on the story. And the cast of Once Upon a Time in Dubai is a reflection of the populations you can find in Dubai. So in our story, you have people from Lebanon, from the UK, from India, no French people like me because we're not that many in the UAE, but we have people from everywhere. And the idea is that every kid from this town can also relate to a character like the Power Rangers. And also when you think about it, Dubai today is more than 23 million tourists, more than 10 million residents in the UAE, and there's only one permanent show, which is an amazing show, which is La Perle. So we also want to create another offer for the tourists that come this season and later. And with the entertainment, coming in the next years and the casinos, there's going to be high demand for entertainment. And I'm sure Once Upon a Time in Dubai can be one of the answers.
What were some of the challenges in creating this, Stéphane?
So that's a great question. There are so many challenges because it's the first musical. There was not before, so people are not used to it. So it took like a couple of months, so that people would know what it would be like if it's like a French musical or UK musical. But now, tickets are selling out fastly. Tomorrow we're already sold out. On Saturday we're almost sold out, and so I think it's going to be a blast.
But I mean, talk through some of the challenges, really, if you can, because this isn't something that Dubai has seen. So how do you know that you get it right?
So we have tested, the show for the past 2 years. The song we have tried with panels, of listeners. Songs are already available on Spotify and YouTube. People seem to like it, seem to love it. The story, we've tested it with the 10 partners. We have 10 amazing companies who immediately backed the project. Companies from Accor to McDonald's UAE, from Property Finder to Majid Al Futtaim, all the big corporations from Dubai, everybody backed this project. And it's not about business. For once, it's about giving back to the place that we love. Everybody does the extra mile because everyone wants this show to succeed, because it will be a collective success and it will give back to Dubai, to the UAE. So everybody's happy to do this. So it's not a challenge. It was a solution, but everybody's really helping us. Now the challenge was to find a venue, because there are not many venues in Dubai for musicals. So you have the amazing Coca-Cola Arena with 17,000 people, but it was too big. And then you have smaller venues.
Right.
We found the perfect venue with the Agenda in the center of Dubai with 3,000 seats.
Stéphane, really quick, what is success then? I mean, this is going to have a limited run. Do you want to take this elsewhere? Do you want to be on streaming platforms? What's the long-term goal?
So tomorrow we start for a season, and we'd like to gather around 200,000 people. That's what we call the first run, the first season. Then we will tour internationally. There will be also a permanent show in Dubai in 2026. So we are discussing with many venues in that sense. And in 3 to 5 years, my final ambition for this project would be an adaptation. So we're already discussing with the players, with Netflix, with Amazon Prime, because everybody's paying attention. And if it's a success on stage, then in a couple of years, wherever you are on the planet, you might see Once Upon a Time in Dubai in your TV or on screens.
Wow. Well, best of luck to you. Hope it goes really well for you and your team. Stéphane Boukris, producer of the musical Once Upon a Time in Dubai, joining us there from Dubai. Stéphane, great to have you. Thanks so much. Now, for a look at some of the other stories we're following today. Israel has approved a deal worth $35 billion to supply natural gas to Egypt from 2026 to 2040. The deal would see 130 billion cubic meters of gas sent to Egypt. Prime Minister Benjamin Netanyahu has called it the largest gas deal in Israel's history. Egypt has bought large volumes of LNG since becoming a net gas importer in 2024 due to surging domestic demand and declining output from its own fields. And the U.S. Congress has permanently ended sanctions imposed on Syria under ousted leader Bashar al-Assad. The move now paves the way for the return of investment to the war-ravaged nation. The Senate passed the repeal of the 2019 Caesar Act as part of a sweeping annual defense package. It's now expected to be signed by President Trump. And coming up, Japan's Asahi Group is buying a majority stake in Diageo's East African Breweries. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Asahi shares in Japan came under pressure today after the company agreed to buy a majority stake in East African Breweries from Diageo for $2.3 billion. The deal includes Diageo's 65% holding in the brewer, along with a majority stake in Kenya-based spirits importer UDVK. We're now joined by Bloomberg's Karen Lee for more on this. So, Karen, what is the deal and how big is it for Asahi? And potentially, what are some of the concerns here that could show up in the market?
Well, Jennifer, this is part of a pretty substantial overseas push by Asahi in recent years as its home market in Japan is growing increasingly saturated. And East Africa is a place where they want to have a platform. It's an area of the world where we're obviously expecting substantial growth in the coming years. But at the same time today, we saw its biggest intraday drop in about a year. So let's look at why that's happening. Citigroup saying that East African Brewers is overpriced, that this could potentially push a nearly $800 million share buyback by Asahi that was expected in the coming year. And East African, it says, is also valued at 17 times its annual operating earnings. That's almost double the alcohol industry's average. So despite this big news, all of that seems to have been making investors a bit jittery today.
Yeah, and EABL has been facing a bit of pressure over the past few years. If we zoom into Asahi, though, what sort of competition has that company been up against lately?
Well, it's interesting, especially in the second half, because it's been under an enormous amount of pressure stemming from a cyber attack in September that effectively crippled its production and its distribution. It even made Asahi process transactions manually, which has, of course, slowed its operations. And that's really created a lot of room for local rivals like Kirin to capture market share. And at the same time, its beer sales are still falling. Sales of other alcohols still falling based on the latest monthly figures. It aims to be fully operational again by February, and that's something that the markets are obviously going to be watching very, very closely, and so are its competitors.
Really fascinating story to pay close attention to. Bloomberg's Karen Lee. Karen, thanks so much for joining us. Appreciate your reporting. Now, let's stick in the region and take a look at some of the other stories we are following. Starting in South Africa. South Africa's inflation eased more than expected in November, lifting hopes the central bank could cut interest rates as soon as next month. Consumer prices rose 3.5% from a year earlier, down slightly from October and closer to the Reserve Bank's new 3% target. Ghana has secured a new $385 million payout from the International Monetary Fund after a successful review of its extended credit facility program. The disbursement brings total IMF support to about $2.8 billion since the West African nation entered a $3 billion arrangement in 2023. The fund says Ghana's performance has been, quote, broadly satisfactory. And coming up, we turn to Europe. The ECB is set to announce its rate decision later today. We are live in Frankfurt with the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. So on the face of it, today's ECB meeting looks predetermined, with no action likely or priced in. Traders, though, are betting central banks across Europe are done with interest rate cuts. But recent hawkish noises have spurred markets into pricing the next hiking cycle. Joining me now to discuss is Zoe Schneeweiss, Bloomberg's economics editor in Frankfurt. Zoe, so we mentioned potentially what we are expecting, but what is the economic picture in the Eurozone right now? What are some of the details that you're going to be watching for?
So the ECB today also, in addition to the rate decision, which, as you said, is going to very, very likely be a hold, is going to be presenting new economic forecasts. And Lagarde already teased last week that they're likely to be raising those economic forecasts. Right now, they're predicting 1.2% growth for this year, just 1% for next year, so a slowdown. So just some numbers just slightly stronger there would already be good news. Overall, though, the Euro area economy is not doing very well. It's just everything's just happening very slowly. We had Germany flatline in the third quarter, contract the quarter before that. Germany might see slight growth this quarter, but overall, it is one of these situations where Europe is growing just about. But if you look at next year, economists predict growth rates, quarterly growth rates for the Euro area of 0.2, 0.3%, and that those aren't really numbers that you can be proud of in any way.
And Zoe, it was not too long ago that we were talking about some of the commentary from Isabel Schnabel. What's your expectation for potentially how we see a split here?
Yeah, so Schnabel, you're right, in an interview that we published last week, told us that she actually thinks the next move is going to be a hike. That did lead to a repricing not just in Europe, but also globally for advanced central banks, saying that hiking cycle will be upon us. It's too early for that now, and she did make that clear. This isn't an imminent move, but just the fact that they say there are no more cuts coming, which one meeting ago, we still were thinking that that would be an option, and saying that hikes will be coming sooner or later. Still, Christine Lagarde is a bit more cautious than her markets chief, than Isabel Schnabel. So we're expecting Lagarde to be very circumspect. The language today that we will get most likely is the ECB is in a good place, and that's been that catchphrase that not just Lagarde, but almost all the policymakers have been using for the past few months.
Plenty to watch out for and to keep you and the team busy. Appreciate you walking us through that, though. Bloomberg, Zoe Schneeweiss there in Frankfurt for us. Zoe, thanks so much. Now, for a look at some of the other stories we are following today. The CEO of Total Energies sees rising demand for oil underpinning prices. That's despite crude slump this week on growing concerns of a global surplus. Looking longer term, he pointed to the industry's underinvestment in new projects as the reason for a pickup. But he was more negative on the natural gas market. He said he expects prices to drop in 2027 as a wave of new projects in Qatar and the U.S. come on stream. Speaking to Bloomberg TV exclusively, Patrick Pouyan also commented on its LNG project in Mozambique.
We lifted the force majeure not to wait. You know, when we lifted the force majeure, it's to work. You know, we have waited for 4 years. So again, we are there and we are given instruction, and we have a lot of US contractors, thanks to the support of US Exim, by the way. There is one condition, which is to use US contracting companies. We have all of them. I will be present in Mozambique. So for me,
so it's going to plan.
No, honestly, during the last 4 years, even there was force majeure, we executed all the engineering. So today we are only in the construction phase.